Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Anterix Inc. quarterly report. Anterix Inc. provides a range of businesses and services that cater to the needs of utility and critical infrastructure customers. At the core of its offerings is Anterix, an active ecosystem platform designed to enable the deployment of private broadband networks and solutions. In addition to Anterix, Anterix offers complementary spectrum, which allows customers to access additional bandwidth for their operations. The company also provides Anterix Security Collective, a service that ensures the security and integrity of its customers' data and communications. Furthermore, Anterix Inc. offers rural broadband services, providing high-speed internet connectivity to underserved areas. With licensed spectrum in the 900 MHz band throughout the contiguous United States, Hawaii, Alaska, and Puerto Rico, the company is well-positioned to meet the growing demand for private broadband networks and solutions. The stock price of Anterix Inc. has dropped by over 26.7% in the past year due to several key news events. One significant event was the company's fiscal first quarter 2026 earnings report on August 12, 2025, where it reported a loss and missed revenue estimates for the quarter ending June 2025. This led to a single-day decline of 6.91% in the stock price. Further contributing to the negative sentiment were analyst outlook and revenue/earnings growth concerns. Analysts forecasted a decline in Anterix's earnings by 118.8% per annum and a similar decline in EPS, noting new major risk revenue and earnings growth in November 2025. Additionally, Anterix was removed from the Russell Small Cap Comp Value Index on June 30, 2025, and from the Russell 3000 Value Index on June 29, 2025, which can lead to institutional investors selling off shares. The operating loss in Q3 fiscal year 2026 also weighed heavily on the stock price. Although the company beat analyst estimates in its February 2026 earnings release for this quarter, the underlying shift from profit to loss compared to the prior year highlights ongoing financial challenges. Overall, these events have contributed significantly to Anterix Inc.'s stock price decline over the past year. Anterix Inc. market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $14 billion. Anterix Inc. trades at a lower price-to-earnings ratio of 6 times and a higher price-to-book ratio of 2.31 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The leverage on the balance sheet appears elevated, with liabilities of 53% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through an analysis of the key factors that have impacted the company's revenue over time. Revenue growth is primarily driven by several key factors. Firstly, the increase in spectrum receivable has contributed significantly to revenue growth, with a notable increase from $7,107 to $8,702. Additionally, deferred broadband costs have also seen an increase, rising from $28,944 to $29,494. Furthermore, the company's spectrum revenue agreements with Ameren Corporation and Xcel Energy have increased by 4.6% and 12.8%, respectively. The commencement of revenue recognition by TECO in June 2025 has also contributed to an increase in spectrum revenue. On the other hand, revenue decline is primarily driven by a decrease in spectrum revenue. Specifically, for the 3 months ended December 31, 2025, Spectrum revenue decreased from $1,574,000 in 2024 to $1,573,000 in 2025. Similarly, for the 9 months ended December 31, 2025, Spectrum revenue decreased from $4,642,000 in 2024 to $4,543,000 in 2025. Additionally, revenue from Motorola has declined due to the recognition of all associated revenue in December 2024. It is worth noting that some Spectrum revenue agreements have remained stable over time, with Evergy's agreement remaining unchanged at $1,155,000 in both 2025 and 2024. The net income of the company underwent a significant transformation between 2024 and 2025. Initially, the company reported a net loss of $20,580 in 2024, but this was reversed in 2025 with a profit of $72,115. This improvement is also evident when comparing the 9 months ended December 31, 2025, to the same period in 2024, where the net income increased by $92.7 million. The increase in net income can be attributed to various factors, including a gain on exchange of intangible assets and sale of Spectrum. This is reflected in the operating income, which rose by $72.1 million in 2025 due to these specific transactions. While profit margins are not explicitly stated for the 3 months ended December 31, 2025, the overall trend suggests that the company's financial performance has improved significantly over this period. Management statements on the company's outlook and strategy are somewhat limited. However, they do provide some insight into their current situation and future expectations. The company has entered into a Spectrum license sale agreement with CPS Energy, which may have implications for their financial obligations. In terms of liquidity, management is confident that they can meet their financial commitments through at least the next 12 months. They are actively managing their business to maintain cash flow, but acknowledge that certain activities, such as Spectrum clearing efforts and sale transactions, will impact their investing activities. One potential risk to the company's commercialization efforts is the current high inflation and macroeconomic environment. This could negatively impact their progress in this area. Overall, while management statements provide some context for the company's situation, they do not offer a comprehensive outlook or strategy. The company's recent financial activities have been focused on share buybacks. According to the provided information, the company has made significant purchases of its own shares over the past year. Specifically, it repurchased a total of 43,000 shares within a 3-month period, and an additional 195,000 shares in the following 9 months of 2025. These transactions indicate that the company is using its resources to reduce the number of outstanding shares on the market, which can have various implications for investors and shareholders. That concludes the financial summary for Anterix Inc. Feel free to comment below, and I will be happy to answer them when possible.